Hello, hello, hello. Well, it's wonderful to be back for WealthE Wednesday, and can you believe it's the last WealthE Wednesday of the decade? And that's quite a statement. There's a lot of background noise, Linda. There's a coming from you.
Let me try to turn off my microphone, see if it makes a difference. Before I do that, hello everyone. Great to be back on for this WealthE Wednesday. Looking forward to it.
Awesome. Yeah, no, I'm not quite sure where the background noise is coming from. I know Lee can't join us today, so we are really excited. Lyndon, I think you're down in Cape Town today, are you?
Yep, I'm spending some time with our technology team, working through some of the product development spaces, and having some really exciting meetings with potential partners who are very keen to work with Migrate for next year. So it's been a great week, really exciting. Things are moving quickly, so I'm looking forward to wrapping up the year on a high.
Awesome. Well, without further ado, what I'd suggest we do is rock and roll straight into WealthE Wednesday. And I always say to everyone, you know, it's all about creating value for you. It's about property, it's about people, it's about profit, purpose, and it's even about a bit of fun. You know, it's that time of the year now where everyone's starting to relax and wind down a bit, depending on where they are in the world, and look to have a bit of a rest. What we look to do is that we've broken up WealthE Wednesday into 2 different sessions. So if you're new to Migrate, just so that you understand, the first session is very much as the world goes digital. You know, we want to still be a people business. We want to be a digital company with a human heart. And so the intention is to be able to come and meet the team, to be able to learn about what we do and why we do it, to come and understand about our existing deals and the platform, the due diligence, and how we look at risk and opportunities. And then also to look about the deals that are coming into the future and any new enhancements that are coming to the platform, et cetera, et cetera. So that's going to be the focus of what we call the lunchtime session. And before we get into that, there's a couple of things I want to share with you in terms of the big picture. We've spoken a lot about Wealth 5.0 and where we're going into the new decade. I'm not going to share too much about it. We shared a lot at the investor breakfast. But really, as the world is changing, we've gone, you know, from we're going now into society 5.0. We've got life 5.0, humanity 5.0, entrepreneur 5.0, and also wealth 5.0. And it's about your impact. It's about your creativity and the ability to create value. It's about high touch and how many people can you influence and add value to. It's about high tech and how you can use technology. And it's about digital and ultimately problem solving and future proofing yourself. You know, we did some webinars, and there's a link there. You can actually go and, you know, go directly to these webinars. I'm not going to repeat too much about them, but we did it in October, where we got the 5 secrets to offshore real estate investment success. We've got how you can immigrate overseas financially and physically. We've got how to build $1 million business, sell it, and live anywhere you want. So how do you epitomize becoming a global citizen? And then we also did a great session with Garth, who is a family office around offshore tax and structuring. And we had phenomenal feedback from all our clients who witnessed the entire webinar series and the value they've got from it. And you can go and go to the link, and the webinar is live, and you can watch all those webinars. And if you do think that they add value, I highly recommend that you share it with your family and friends. We also did our Wealth Weekend with our top wealth partners and VIP guests. Hilda Lunderstedt and Garth Wellman ran this. We had incredible feedback. You know, it's quite overwhelming when people use words like life-changing moments. We had a number of people that said that. Now, unfortunately, you know, there's no way to get access to that unless you were physically there. But I just wanted to mention, because what we're doing is taking away from that and learning what people really, really wanted. And in the new year, in January, we're going to be launching our Wealth 5.0 Accelerator. And there's going to be 12 parts to that. It's going to be a 12-part course, a digital course, where we're actually going to take all the best parts of what we've learned over the last quarter, the parts that added the most value to people, and we're going to be sharing that from a digital perspective. And then also what's really interesting is that the world is consistently full of knowledge now. There's so much information out there, and yet most people don't have any direction. They don't know what to do next. And that is why we've launched our starter pack. We launched it in a beta test form now over Black Friday and Cyber Monday. It's closed at the moment, We will be relaunching it in time for Christmas and the New Year. And it's really a way for people to get started. And so if you're sitting today and a lot of the stuff sounds overwhelming, this is a simple way to get started. And what's involved in the starter pack? Well, to start off with, you get a $100 voucher so that you can literally, real people investing in real estate and actually get started, learn while doing. You've got access to the Inner Circle, which is our global community where you can learn, you can grow, you can get coaching and mentoring. You've got access to our eWealth pack, which is all the information, all the knowledge and all the different resources. You've got the Migrate degree, and we're going to talk about that quite a lot tonight, actually, in terms of goal planning. And then you've also got the Wealth 5.0 Accelerator. So watch the space. There's no way to get the starter pack today. If you are interested in the starter pack, just type in there starter pack, and we'll let you know once we're ready to launch it again. As I said, we launched it in beta version. And then this evening, we're going to be doing a different session this evening. So during the lunchtime session, it's much more about the deals, and Lyndon and I running through the deals, the risks, the opportunities, how the platform works, and where we're at. And then this evening, it's much more of a theory-based, where we really want to add value to you. And tonight, we're going to be looking at goals, planning, and how to thrive into the next decade. I've spent 20 years of my life trying to learn from the best in the world, be they Tony Robbins, Roger Hamilton, Richard Neft, Hannes Dreyer even, so whether they're global or international or local people. There's no one perfect system out there, but what I've done is brought them all together into a goal planning system that I use, and I want to share with people all about that tonight, including some of the training that I got from Chet Holmes and Tony Robbins over a decade ago that I want to share with you. And so that's what we'll be running through tonight at 5 p.m. GMT time, which is 7 p.m. South African time, 9 p.m. Dubai time, etc., etc., etc. You can work it out. But without further ado, I wanted to hand the screen over to Lyndon, and we actually want to get real today. And rather than looking at PowerPoints, we want to get onto the platform and actually start to really look at the deals, how the platform works, and let Lyndon take us through the different deals so that we can talk through them. So over to you, Lyndon.
Great, thanks, Scott. I must remember to undo my microphone when I start talking. So thank you, and to those of you who have not logged onto the platform before, let's actually show you that very first step in the process so that you can actually see it from the very beginning. Scott, please confirm when you can actually start seeing my screen, because that would really
we're seeing a screen.
Help. All right, so are you seeing the use technology to invest in global real estate screen right now?
Correct.
Right, brilliant. So if you're new to our platform and have not logged in before, you will note here on the top right-hand side, there is a sign in button as well as a become an investor button. And you will use one of those two depending on whether you are. If you have not signed in, please just hit the becoming an investor button. You will be asked to enter, let me actually take you straight there so that you can see what it looks like. You'll be asked to just give us, it takes us, because I'm currently logged in, it's not going to show you that journey. So let me backtrack. It literally asks you to please add an email address and choose a password. Once you've done that, you will arrive at our marketplace. Let me give you a very quick tour of our marketplace just to orientate yourself so that you can understand the different pieces you are seeing. On the left-hand side is our main navigation channel. This is where it'll take you to see current deals on the marketplace. It'll allow you to click through to see your own personal portfolio, the deals you've invested in, the returns you're receiving. And then the last one is if you need or would like to increase your knowledge, to invest in yourself and your understanding, then to go to our education page, which takes you through to Wealth University, where there's a whole range of different resources that you can use to enable yourself to grow and to learn more about the real estate investment world, including through how to use the Wealth Migrate platform. On the top, once you're in your marketplace or your portfolio, on the top you have your overarching summary of your investments at any one time. This is a demo. You can see here I'm using a demonstration user, so it is not real data. If you had investments, it would tell you the total value of your investments, how many investments you have invested in, but we are still waiting to close that particular deal, and how many are existing deals that you've invested in that are active. In other words, they've been closed, the deal is operating, and you are beginning to earn your money. On the right-hand side is your quick buttons bar. The first section is where you choose your entity. So what we understand is that many of our investors might not always invest in their personal name. They might invest in a company, in an offshore structure. They might have different accounts for their children so that they've started to invest for their children. And what you can do is on our platform, once you've logged in, you can choose which of those particular entities you would like to invest or see what is happening for. At the moment on this particular demonstration account, I've only got one, which is my personal one. My name is Demo, my surname is User, but you can see I can create a new entity. So that is how I would come and put in a trust or a company, an offshore structure, so that I can keep those investments and portfolios very separate. Now, probably one of the most important buttons on our website, on our platform when you're beginning, is this green button. You'll see on my one, it says it's green. And basically what this means is that my identity has been verified. We are a global financial technology company, which means that we have to comply with all the global requirements around processing financial transactions. And the first step is to make sure we know who it is that is using our platform. This is a standard process every time you open a bank account or do an investment through any investment platform. It is just us requiring to know that we can prove you are who you say you are. It's a very quick journey. If you are not verified, you upload an identity document, a proof of residence, so that we can say, yep, this person is who they say they are. Once you have done that, it normally takes us about 24 hours to verify. We have a very quick turnaround time. And as long as that button is green, you are good to go. You are able at this point to make investments through the WealthE Migrate platform. If you need to go and edit any of the information, you can just go through your profile. There's a help section with frequently asked questions. And if you need to leave at any point, you can hit the sign out button. That is the basic navigational template through the WealthE Migrate platform. Scott, I'm not sure at this point that if there's anything you want to emphasize or ask before we actually move on to the deals.
No, I think the only thing I would talk of is, I presume once we go to the deals, you'll take someone through the process of how to invest. But other than that, I think we're good.
Absolutely. So let's go straight there. You'll note on our platform, on the marketplace page, you have a whole range of different deals. We've had a very, very successful and active last 2 to 3 months. You can see at the moment that many of the deals that were on our deal history displayed on the page is normally about 3 months. And you'll see that we've got many of the deals that are now 100% funded during this time period. There are only 2 deals at the moment that are still unfunded, that we still have space for investors on, and we will be loading a whole bunch more in the next few weeks. Probably more heading towards the beginning of the next decade, January, where we've got some exciting deals currently in the pipeline. So if you're a new investor and you're arriving, you can see the 2 that are currently, you'll see it states open versus funded. And that means that they are currently open for investors to be able to participate. And I think let's jump in onto Atlanta Portfolio Medical 24. If this is what you're interested in, you can click on the button. Now, the first thing you'll notice is that on my screen, I have an invest in this deal button. Now, if you were not verified, so in other words, if this button here that says we have verified who you are, if you have not completed that and it is orange or red, you would not get the invest in this deal button. So if you are onto the platform, you're hitting the invest in this deal button, or you're going to this particular deal and there is no invest in this deal button, it's because you have not completed your verification process. So please make sure you check that and do that first. What I will do is just very quickly show you how we invest, and then we can come back and have a look at this deal. The investment process now is very, very quick and straightforward. If I like this deal, I will invest in it. It asks me how much I'm looking to invest. So if I say, well, I would like to put in $1,000 US, it'll do a fee calculation and tell me the complete amount required that I would need to deposit. Now, if you'd like to understand more about the fees, there is information. You can drop down and understand what the fees are, and we can certainly go through that. If there are questions, if anyone on this webinar would like to understand that, please just drop it in the question box. Scott, we haven't done the question box yet, so I think let's just quickly go there. We always like to know who our investors are and what part of the world you're coming from, so please do jump on. You'll notice on your screen there's a question section. Go in there, and I'm assuming if you have a question, please do type that in, but if not, please maybe just let us know from which part of the world you are currently listening to us from. It's always great for us to connect with our global network. It's also a way of making sure that you're engaged and that you're listening to us, so please do go and respond. Just let us know where you're from. Yes, Scott?
No, I was just going to say exactly that. Two things. One is that it helps people get engaged and learn where the button is, and two is the whole idea behind this session is not meant to be a one-way presentation. It's meant to be an interactive session. So the only stupid question is the one unasked.
Absolutely. And to that point, so if you would like more explanation on our fees and how they work, please drop in your question. And if there's anyone who would like that, we can certainly get onto it. What this now has done is it's told me that for my $1,000 investment, I need to make a deposit of $1,030. I would click the next button. It's then asking me to confirm a whole bunch of very important information. Wealth Migrate is not a fund, and we are not a unit trust. We are not investment advisors. We are a global real estate investment platform. And what the difference is that you as the investor are empowered to make your own investment choice on the Wealth Migrate platform. It is not you giving us your money and then we go and decide what deals we think would be good for you. You have been able to come and make that decision 100% on your own. And this just acknowledges it. It's asking you to say, I am able to make this decision. I am making it. I have not been told to make it. Wealth Migrate is not making it on my behalf or giving me advice. We have created a platform for you to be empowered to come and make your own investment decisions. So you click those attestations. You can then come and read the actual agreement that you are entering into. This is the nitty-gritty of the legal between yourself and ourselves, saying you as the investor are going to be investing through the Wealth Migrate platform. You're investing in this particular deal. This is the terms and conditions of the deal. The information from the sponsor who has brought you the deal is all here. You can download these documents. You can go through them in detail. And once you're happy, you can come back and you can say, I agree. Now, I'm not going to put the I agree button yet because once I've done that, our platform will register this as an actual purchase because I am dealing with the live demonstration here. And I don't want to do that to our team on the back end to get them all excited. But once you push the I agree button, your transaction is complete. It will then provide you the trust account or the escrow bank account details where you can go and make your deposit. And once you've done that, you are done. That is as simple and easy as our investment process on the Wealth Migrate platform. Scott, once again, I'm not sure if there's anything you want to add at this point before we jump onto the actual deal in front of us.
The only thing I'd like to add is we've got a really exciting change which is going to be coming about in the next month in terms of the digital wallets. And I just think it's worth just mentioning that so that people are aware of the change that's coming and why it's going to add so much value to people.
Yeah, absolutely. So I think a digital wallet is at the heart of our offering to an investor. And basically what a digital wallet is, it's inside of the platform, it's an account. It's a transactional account that you can use for your investments. If you think about when you sign up for a share trading platform, you sign up, you get allocated an account and you deposit money into that account. Once you've done that, you can then very easily go and say, I would like to buy Apple shares or Microsoft shares or whatever kind of share you would like. And the money's already sitting there. So as soon as you click the button, you are buying that share. When that share pays you a dividend, that dividend goes back into that transactional account and you can immediately use it to reinvest or to buy a different share or to withdraw it out of the account. We are in the process, we are literally hopefully 2 weeks maximum away from having digital wallets reintegrated into our platform. We have switched to a new digital wallet service provider who is probably the biggest provider of digital wallets to investment grade platforms in the world. They are based out of France, a highly regulated environment. And what this means is that for your specific account, you have a dedicated transactional account where your money, you'll be able to see it. Now, Wealth Migrate never touches that money. We are not able to access it. It doesn't move through our bank accounts. It is only controlled by yourself when you log into our platform, and you are actually having a direct conversation with the banks in France that are holding their money on your behalf until such time as you are wanting to invest or withdraw it. We're very excited. The service provider we've been in a long relationship with, lots of negotiations to make sure we're bringing the best possible opportunity to our investors to be able to have this wallet.
Cool.
All right, with that in mind, let's jump very quickly into the two deals we have open at the moment. And after that, Scott and I thought it might be very worthwhile just taking you, the investors, through the two things that we would like to have a chat about, which is kind of what are the different kinds of deal structures and how do they work, and what do you need to know as the investor when you're looking at that. So we'll get into that once we've been through these two deals. But let's have a look quickly at the first two deals. Scott, Atlanta Portfolio Medical 24, brought to us by Allvest. We have a long relationship with Allvest and a long history with providing medical deals to our investors. Now, I know you were actually one of the first investors. So in addition to being the CEO and founder of Wealth Migrate, you're also a real estate investor yourself. And I know that you were one of the first investors who identified the medical area as a really exciting niche opportunity for global real estate investors. Maybe you can just give us a quick outline of why do you think medical is so exciting, and our relationship with Allvest, who have brought us many, many medical deals over the years.
Yeah, look, I'm probably going to repeat a story some people have heard, but for those who haven't heard it, it was in 2009, I'd helped about 2,500 people buy houses or apartments, including me. And again, I've got a whole bunch of degrees, and no one had ever taught me medical. And I met these two very wealthy guys in Bondi Beach, Sydney, and we were right in the heart of the last crash. And I sort of said to them, you know, what are you investing in? And they said medical. And I was like, why medical? And they said, well, it's pretty simple. The first thing is that no matter what happens in the global economy, people need doctors. I was like, okay, that makes sense. Secondly, doctors never leave their premises. And I thought back to my childhood, and in my case, the doctors passed away, but the premises are very much going strong as medical premises. And thirdly, doctors are hell of a good at being doctors, but they're not accountants. And so they sign very good long-term favorable leases. And I remember thinking to myself, well, this is an absolute no-brainer. Like, how come no one's ever taught this? And it took us a long time to figure out how to get into medical. In those days, those two wealthy gentlemen, you could only invest in Australia in medical if you had 5 million Australian dollars each. Since we launched the platform in October 2013, we've been allowing people to participate with much, much smaller minimums. And some of the deals that you're showing, we started getting into medical in America in 2014. So we've got a number of deals that have actually come up now on the, with the partners that are coming up on the 5-year cycle, where there's effectively a 5-year track record. And I think the last thing that's quite important is that when we were doing our due diligence in America, I remember asking them, what happened? What were the consequences to the medical buildings over the crash? And you must understand, in 2008, 2009 in America, residential property in different cities, depending on what city you're in, lost anywhere from 40 to 70% of its value. Whereas in the medical space, they didn't lose one tenant. And that's really important because it's a very income resilient investment class, and you get consistency of income through good times and through bad times.
Absolutely. And let's get into the detail of this particular deal, Medical 24. Once again, Scott, I'm going to put you on the spot because I know you have a history with this building, and one that you're very proud of.
Yeah, so if you just go up to the picture. So I was at this building when the partners bought it. And my ego definitely got involved as well, because I never ever expected to be investing in such an amazingly nice looking commercial building It's right in a very, very good area of Atlanta, which is one of the top cities in America. It's the financial capital of the southeast of America, and it's the fourth biggest economy in the world, to put it in perspective, which most people don't understand. And this is really in one of the best areas. You know, it's sort of, by South African standards, it would be in the Sandton of Johannesburg, or the Manhattan of New York, or the good areas basically of the city. And I always joke with people, I probably own the door and the street pole, but the beauty is you get to participate in the deal. Now this was this is a deal that the partners have owned for 5 years. It's now got to the end of the 5-year period, and every deal we always look for a liquidity option. And what the option was is that we went back to the investors along with the partners and said, listen, who would like to stay in this deal? And there was a large majority of people, more than 70 to 80% of people, that wanted to stay in the building. Some people wanted to exit. And so what we did with the partners was effectively amalgamate 2 different portfolios of income producing medical assets that allow people that are in the deal to stay in the deal, but also allow new people to get into the deal at a market-related valuation, so an independent market-related valuation. The other thing that's quite important with this specific deal is a number of the deals that are, a number of the properties that are involved in the portfolio are owned by the VA, which is the Veterans Association. Now, that is a government organization that helps the war vets when they come back. And because of the Donald Trump challenges, they haven't been prepared to sign more than a 1-year lease. Now, in commercial property, it's really important to have longer leases. So we always look for 5 to 10-year leases. If you sell a building with a 1-year lease, you're not going to get the maximum value for that building. And so the strategy here is to work with the VA clinics. They have given the intention to the partners of doing a 10-year lease to get the 10-year lease in place. And once the 10-year lease is in place, to actually sell the building on to a fund or a REIT, because obviously it's got stabilized rent. Now, that doesn't mean that even though there's a 1-year lease, that doesn't mean that we're not getting consistent income, and have done for 5 years through the building. And when I talk in the I talk as an investor. I actually invested in this deal and have experienced those returns.
Great, thanks, Scott. The numbers on this particular investment, you'll see that the internal rate of return is 14%. So once again, for our investors who might be new to our terminology, we do try and keep it as simple as possible, and at the same time we need to use standard investment terminology. The internal rate of return is at its simplest a summary of your returns per year over the lifetime of the deal, when you include both the actual cash you get paid each year plus the estimate capital gain that the building is gaining each year. So if this is a 5-year deal and they expect that the building will be worth, let's keep the math simple, 25% more in 5 years' time, that is an annual growth in the value of the building by 5% each year. And if you are then getting 9% back each year in cash as actual payments of the rental, you add that 9% to that 5% and you get an annual estimate of your total return at 14%. That is the internal rate of return. I've given you a very simple answer or explanation. If you would like a more complex understanding of internal rate of return, there's a great help article on our site. And welcome just to reach out to me directly at linden@wealthmigrate.com, and I will send that through to you or send you through to the link. Otherwise, just go onto our website and find it.
Another way of looking at it, which is important, and this is the same for any investment, whether it's property, stock market, bonds, cash, whatever, is that you take the IRR, and if you want to figure out how quickly you're going to double your money, you divide it 100 by the IRR. So let's just keep it simple and say it was 15. That means it'll take on average 6 to 7 years for you to double your money. And it's just an important way that investors look at how one can look at how you're going to double your money based on the returns. And again, IRR is the most used methodology across all financial instruments for people to be able to compare an apple with an orange.
Correct. And the other important metric on this particular deal is you'll see here it tells you the investment term. So what this means is that you will be in this deal for approximately 3 years before the sponsor, in this case Orvest, will sell the deal or refinance the deal, and you will get all your money back, including the capital gain that they get from selling on. So on this particular deal, you can expect to have your money locked into the deal for a 3-year period. Now, that is not an absolute amount. The sponsor has a bit of flexibility in deciding exactly when they want to sell. If they get a fantastic offer after 2 years and the market conditions are right, everyone would be silly not to accept that offer if they think it's the best way for you to make the most money. And on the other side, if in 3 years' time there's a significant depression in the market, or and because of that they cannot get the sales price that they want, and they know that if they wait an additional year, you as the investor will make better returns, they have the flexibility to wait at that little bit extra. The key is that your interests and the sponsor's interests are aligned. They invest into the deal alongside you. So the time in which they make the decision to sell and return everyone's money is they're going to be also deciding for themselves, is this the best time for us to sell so that we can get the most money? So we do ask every sponsor to give an indication of the plan for the timeline, in this case 3 years, but it is not an absolute have to sell at exactly 36 months from the day the deal closes. Scott, once again, I'm not sure if there's anything you want to add at this particular point around that.
No, I think it's just, you know, the beauty of technology is that it improves things and it makes it safe and simple, but it doesn't take away the fundamentals of investing. And what you've just spoken about there is based on our extensive experience in real estate investing, and you know, never quite knowing what is going to be happening in 2, 3, 5 years' time, and allowing flexibility on both sides of the fence to protect investors.
Absolutely. So that's it for Medical 24, brought to us by Orvest. This is their 13th deal on the Wealth Migrate platform. I personally, in my own capacity, since I've been investing as an investor in Wealth Migrate, I own a piece, just like Scott, maybe the front door and a pavement, but I own a piece of 6 of their particular deals. So certainly a company that I know well, and I think our investors, many of the investors on the Wealth Migrate platform, are very familiar with. And with that, let's jump to the next. And what I love about the Wealth Migrate platform is diversity, not only in terms of country, but in terms of type of deal, the way it's structured, the underlying business. And these 2 deals, in fact, are such a great example of that diversity because they are so completely different. There are some similarities, and in this particular case, the similarity is in the kind of underlying sector. So the previous deal was a US medical sector. This is a UK aged care sector, and many of the underlying fundamentals in this sector remain the same. We know that in these countries, you are getting a growing elderly population that needs both medical care as well as aged care. You have a boom in the baby boomers who are coming through, and at this point are now getting to their 60s and 70s. So if you are able to participate in the economies that they are generating, and of which obviously medical and aged care are significant factors, you get the benefit of this particular population dynamic. Once again, Scott, we had the RB Care Homes team recently visit the investors who are based in South Africa, and they spent a week in South Africa, and we got to meet them directly ourselves. I know you spent a lot of time with them on the tour. Maybe you can just give us your quick overview of RB Care Homes, your impression, and maybe just a little bit more information about the aged care sector that they are playing into.
Yes, I think the first thing is that, you know, one of the ways to make money is to look for long-term trends. So just to highlight what you said around medical and aged care, you know, in first world markets, England, Australia, and America, you got the baby boomers coming through. Clem Santa always jokes, if you put a roof over England, it would be an old age home. And one of the things that's different is that in America, you've got private medical care and private aged care like you do in South Africa and other parts of the world, whereas in England, you've got government. And so you've got the NHS, which is the National Health Service, and they basically provide both medical and aged care. And so what's really interesting here is that there's a real need for aged care providers. There's not enough aged care providers. And so what the partners do is that it's a public-private partnership where these homes are privately owned, but the tenant, your tenant is actually the government. So the way that the NHS works is that they pay the money through to the local authorities. The local authorities are like your local councils. And then the local council's role is to look after their aged and old people, and they effectively pay the rent. So you've got a very, in their buildings, more than 85% of the income is actually coming from the government. So you've got a very stable tenant, and whether Brexit happens or Brexit doesn't happen, you know, at the end of the day, they're not going to kick old people onto the streets, which I think is really important. The second thing that I think is really important is that what I loved is that there's complete transparency in the aged care sector. So they've got a traffic light system where you can actually go out, and maybe Lyndon, you can even pull it up while I'm talking, where you can actually go out and you can review different aged care facilities, et cetera, et cetera. It's completely transparent. And what's interesting is that our partners, RB Care Homes, are one of the preferred providers by the local authorities. So what that means is that in some of the sectors that they deal in, like I should have just forgotten them now, but the mental health diseases, etc. I can't remember the bloody word of it now, but like Alzheimer's and that type of thing, they're the preferred provider, dementia and that. They're the preferred provider. So what's really interesting is that they tend to go in and they look at aged care facilities that are not up to scratch. So they've got them in green, orange, and red. And what that allows them to do is to take over a working operation, but that they can buy it off a very good price from the seller. Because if the seller loses the license, it dramatically will impact the value of the building. And they always say in business, it's really important to buy, in business or property, to buy from a motivated seller. So in this case, they're buying from a motivated seller. They're buying it at a low value, and then they're bringing in their team to be able to increase the value of the property. Now they've got 17 different care homes. So again, you're not dealing with a mom and pop operation that have not done this before. They've got over 500 beds that they're already managing, and that's why they're able to deliver the returns. You know, one of the things that Lyndon and I spoke about live was when he first came to me and he said, you know, a 10% cash on cash return in England. I said, it's rubbish. It's too good to be true. Because in the residential sector, you're looking at maybe 4 to 5% best case scenario, 4 to 6% maybe. And in the commercial sector, you're looking at maybe 3 to 5%. But in this sector, you're looking at a 10% cash on cash return. And the reason being is it's aged care, and it's because of the low values that they're purchasing at, and then basically the rates that they can rent out the rooms to the local authority. And they went through all the numbers, and it gave me peace of mind that the numbers stack up and make sense. Now, what's really important as well, we didn't talk about it in the medical building either, which was a cash on cash of 8% in dollars, was that a lot of people around the world equate a cash on cash to a yield. So they think that, you know, an 8% return in South Africa, as an example, is the same as an 8% return in cash and cash, and it's not. The one is a gross return before costs, and the one is a net return after costs. And so if you're getting an 8% cash on cash return in dollars, that means that you're getting an 8% net return in your pocket. So if you're investing $10,000, it means you're getting $800 per year net in your pocket, positive cash flow income. If you're getting a 10% cash on cash return, that means you're getting a net positive 10%. So if you invest $10,000, you're getting $1,000 per year positive income in your pocket. And it's really, really important for people to understand positive cash flow income, because as the global economy around the world is changing, you know, one of the things that I've learned from wealthy people is they always focus on investing in income resilient assets, be it medical, be it aged care. And both of these opportunities provide those where they're economically resilient and allow people to be able to participate in those deals. And the final thing, I think, Lyndon, which is important from my takeaway, was the exit strategy. So in any investment you want to invest in, You know, on Medical 24, we spoke about the exit strategy where they're wanting to, you know, increase the lease with the VA to a 10-year lease and then sell it on to a fund. In this case, there's been large investment in the aged care sector. In fact, big banks out of Africa like Old Mutual, Investec, have actually invested heavily in the aged care sector. But they like to buy large portfolios of income-producing assets with stabilized rents. And so their aim is to get it to 1,500 beds. Remember, I told you they were at 500 beds, and then look to actually on-sell it to a fund or a REIT, a real estate investment trust, and or list it as a public REIT, which is again, I'm probably getting too complicated now. But they are all the exit strategies that they have in place. And because of that, they've got a defined exit for the investors on a, I always forget, but it's like 3, 6, 9, 15, or 20 years. And as an investor, I like that because I know what my liquidity hurdles are. There's not huge capital growth in the sector because, again, when one investor has an investment and they're selling to another investor, it's always an arm wrestle over income and return. And so we worked on fairly conservative numbers of a capital growth of about 3% a year, which actually is you know, fairly standard actually by UK standards. And so you're looking at an IRR of as Lyndon's got there, 12.5%. But the real focus on this asset is the income. You know, it's very seldom in British pounds you're going to get a 10% cash on cash return. In a income resilient asset where the fundamentals make sense. It's in a sector that makes sense.
Yeah, Scott, I think what's great for our investors is because these two deals are so different, both in where they are, the kind of deal, but also in terms of the numbers, it is such a great opportunity for us to use it as an example of the kind of investment decisions we get asked to comment on all the time by our global investors. And the key decision we often get asked is people will have a look at this and say, so Lyndon, thanks, this deal out of the UK is providing an IRR at 12.5. The medical deal is providing an RRR at 14. Does that mean the medical deal is better? Firstly, I never give advice. I think you know, that's not our role. Our role is to educate and help you make your own decision. However, I think what's important is as you're being enabled to make your decision, understand the difference between the two. And in this particular case, the difference here is that the IRR for this deal is made up of a 10% cash on cash return. So in other words, you're getting 10% a year guaranteed, which is another big difference, money in your pocket. Whereas the previous one had, I think it was around a targeted 8% that you were getting in terms of the return, and it was based on the rentals. So as long as they had rentals, they would pay you that. 8% is still very good returns, there's no doubt about that. But this one's cash, actual money you're getting is higher. However, in the medical building in the US, their projection is they'll be able to give you more capital gain. So at the end of the deal, after 5 years, their capital gain, as we talked through, was going to be expected at about 5 to 6%, whereas this one is 3%. So is the one at 14 better than the one at 12? That depends on your investment strategy and what you need. Some people like having cash returns because that means you're actually getting the money, you can reinvest it, it gives you more flexibility, and it's a guaranteed return of 10%. Other people are not so much worried about the income, they are wanting to know the overall returns over the time, which one's going to be more. So both deals, they wouldn't be on our platform if we didn't vet them and think they were great deals. But it's not to say that the one with the higher IRR is better or worse than the other. They are offering you a different scenario. One is far more about guaranteed income. The other one is about a degree of income, but a bigger term play for the long-term growth in your money. And that then really becomes your choice as an investor as to what you want and what matches your investment strategy. For me personally,
sorry, after you, Lynn.
Yeah, I was just about to say, for me personally, I'm a great fan of diversification. I don't like all my eggs in one basket. I like to spread my personal investment funds across a range of deals in a range of different countries. with a range of different sponsors, in other words, people bringing us the deal, into a range of different business models. That way I'm comfortable that I have got a very well risk-adjusted portfolio, and I have diversified the funds I have so that I can benefit from multiple different strategies. So that's my personal perspective. I know we all have our own. And Scott, yep, you wanted to add something.
No, I think I was just going to back that up. The diversification is so important, and we've spoken about it so many times on all the different webinars and live events. Some of the wealthiest people in the world, like Ray Dalio, Warren Buffett, they talk about diversification across assets, across countries, across currencies, across partners. It's really not wise to have all your assets and money tied up in one country, one asset class, one currency, or even one partner for that matter. And that's the beauty of the platform nowadays, is that you can diversify across all the different sectors, countries, asset classes, and partners easily, safely, and quickly. But one thing I'd like to, two things actually. One is that I just wanted to mention, which I didn't actually know, was that the normal returns that investors get is 8%, but because again, the whole beauty of Migrate is the buying power of the institutions, was that because we're coming in and taking much larger investments than a typical investor on their own, a retail investor, it's that whole retail wholesale, we're actually giving people access to the 10%, which is their highest tier, which again is just great for investors. And again, it's WealthE Wednesday, so people can participate, literally from $1,000, and get the same returns as people that have to invest hundreds of thousands of dollars, if not millions of dollars. The other thing I'd like to do, Lyndon, is if you could just show the risk rating, because I think it's always important just to run through that. Do you want to just explain it quickly?
Yeah, sure. I'll happily do that. And I wanted to leave us a little bit of time just quickly at the end to jump into different deal structures, but I think we might run out of time for that. So maybe I'll throw that in January's WealthE Wednesday. We can maybe focus on that a little bit more. What's the difference between the equity structure versus a debt structure versus something that's backed by an actual asset versus a company. But I think we're going to run out of time for that today. So let's put that on hold till January, and let's run through these investment risk categories.
My suggestion is that's a very good thing to run through, and that could be our lesson, like we do the deals at lunchtime and the lessons in the evening. That could be our lesson for the evening,
Yeah, sure. So we can definitely see when we can get to talk about that with the investors. Absolutely. So let's run through the risk categories very quickly. So you'll note every single deal has a risk category on the card. So you'll see here it says Core Plus. And then there's a brief little graph on the actual deal page that tells you where in this scale of risk versus return each deal sits. The first thing I would like to say is these are not categories that WealthE Migrate invented. These are standard risk categories that are used globally to analyze investments, and in particular real estate investments, but not necessarily only real estate investments. And at the heart of the equation is that the higher your risk, the more you're going to get a return. And the reason for that is if there is something that is that has low risk, when someone puts that asset onto the marketplace and says, here, I'm selling an asset that does not have much risk, there'll be a lot of people interested in buying it, which means you'll probably pay more for it than if something has got a high risk, where there will be less people interested, so you will pay less, and therefore your return will be higher. And that is the fundamental principle behind all of these. If I take you through the four categories very quickly, a core asset is a great, relatively new, if not brand new, building in a highly sought after environment. So central London, central New York, central Sydney, central Dallas, like Scott is just talking about. And you have a very strong tenant. So a tenant who is pretty guaranteed to be there for 10 years because their company's not about to go bankrupt and they're not about to not be able to pay the rent. You put all of those factors together and you have an asset that pretty much everyone wants. But because everyone wants it, you're going to be paying a high price for it. These kind of assets are normally the kind of assets that funds and institutions want to buy. They will hold them for 20 years because this asset does not necessarily make you a lot of money in terms of either the returns, because you're paying such a high price for it up front that it's not like your returns ratio is very high. And secondly, it's a kind of asset that there's not much you can do to add value. You're not going to be adding a lot of renovations because it's already in great shape with the business model very established. So it's a long-term play. You might hold it for 10 to 20 years. You might make 2, 3, 4% depending on your market out of it, but it's safe. And because it's safe, it's what you put in the bank as a fund or an institution. The next category as you move up is what's called a core plus. So these are the very similar building where one of those factors might be slightly different. So it might not be central New York, it might be an urban area an hour away from New York. Still a great tenant, still a fairly new building, but because it's not central New York, you won't pay as much as you did for a central New York building, and therefore your return is slightly more. Once again, because you have gone away from central New York, your risk is slightly higher, because if you had to sell it again, you might take an extra week or two to sell and your price might not be as high as something that is as in strong demand as in central New York. But core plus are still in the low risk and relatively low return space. It's a great deal, great opportunity, just not the best premier locations or tenants. Most of our deals fall between core plus and value add at the moment. We like a core plus deal. It's the economy we're heading into is getting to places where we're not exactly sure what the world's economy is going to do for the next 3 years. We want something that's relatively low risk, where you've got income, but we don't want it to be too boring that you're only earning 1% as you might on a core. So core plus is a sweet spot for us. Our investors are really liking core plus. And the investors are also very interested in value add. Now, a value add deal is where you are buying an existing building with existing tenants, but you are changing something about the business model in a way that is going to enable you to earn more rental from that building. Either you're going to do renovations, and after the renovations, you can get new tenants at a higher price, or you're going to add an extension to it so that you can have more rentals on the same piece of land. You're going to do something. Now, why the risk is slightly more is you've made an assumption. Your assumption is that by renovating, I am going to be able to firstly spend some money up front. I'm going to have to renovate. And then by doing that, I'm going to get a higher return. Now, whenever there's an assumption in a deal, your risk is slightly higher. What happens if that's not true? So you've done the renovation, and there's not the demand that you assumed would be there. So the risk is slightly higher, but because of that, when you buy the asset, you're going to buy it cheaper than if it was a core or core plus. So your opportunity to make a return is higher. Value adds are a combination of buying something that's already got income, but that you think by doing something you can increase the actual value of the building itself and get a better capital return. So it kind of plays in that space between an income focus and a capital gain focus. And I think that's why for many of our investors, they really are liking the value add space at the moment, because it is not purely an income generation. They are seeing some upside because of the activities of the sponsor, but it is not all the way in terms of opportunistic, which is where I'll go to next, high risk with no income. Opportunistics are either you're buying something from scratch, there's a plot of land and you want to go and build from scratch, you want to be a developer, or you are buying a building that is not actually able to generate income at the moment because it's in such bad repair, or there's something wrong, or the market has changed, but it's where you're going to buy it, fundamentally change something, build something, knock it down, redo it, and at the end of that period you sell it because now it's a new building that has the potential to earn income. The opportunistic deals right now, Wealth Migrate is shying away from. We are not bringing many opportunistic deals to our platform. Once again, the reason from our perspective is that we are not sure where the world's economy is heading in the next 3 to 4 years, and development deals in an uncertain economy are much higher risk than development deals in a growing economy that everyone's confident about. Because by the time you get to the end of 3 years, you might not be able to sell it or to get the tenants that you expected, you assumed were going to be there when you started the deal. So our investors right now are not giving us a strong appetite for opportunistic deals, and that is why we are very much focusing on bringing you, the investor, deals between the core plus and value add space. Scott, I'm not sure if there's anything you want to add or ask as we went through those.
No, I think it's a good definition in terms of people understanding it, and again, on every deal people can go and see, and we try and highlight the risks of what we're doing. There is a question here that I think is important that Gerald's asked. As soon as I invest in a deal, how do I keep track of the investment via the platform?
Great, that's a fantastic question. So on our platform here, there's a portfolio page. Unfortunately, this is a demonstration user, so it doesn't have anything in its portfolio, but at least I can show you the overall structure. On the portfolio page, you will be able to see at a very quick glance what your total investment value is based on at the time you purchased it. We don't revalue every year. It is literally a value at purchase date portfolio statement. And then if you had deals, in this section here, there would be a table with each deal. Now, every time a deal gets a payment, a dividend that's normally paid out quarterly, but it's dependent on the sponsor. Some of them pay out monthly, some of them every 6 months. They will give you that information at the time you invest. It will give you that information. Every time there's a payment, it would register on the portfolio under that deal, telling you that. In addition, the sponsors are required to send us reports for our investors on a quarterly basis, which is a written report explaining to you what's happening, any developments, any news, the finances, how the rentals are doing or how the construction is going, and we put that up on the platform. Our tech team is working very hard at the moment to add a chat functionality so that the investor can come onto the platform and directly through a chat function ask questions and get updates from the sponsor, who will log in on their side and also be able to give you direct feedback and answers to your questions. That piece is not yet in place. So at the moment, any investors who have queries, they contact our investment team and repass those questions onto the sponsor, get an answer, and come back with that answer to the investors.
Lyndon, in terms of the future, one of the things that I think is very important for people to understand is what is coming in the supply pipeline. One of our aims is always quality over quantity. I know that you turn away many deals on a weekly basis. Just give us a bit of a view into the future of what we can expect. And I presume you've given me back my screen. I can take it back.
Absolutely, I have. Yes, Scott, next year we are very excited. Next year our growth strategy is to bring on new sponsors, but also to open up new areas, new regions of the world for deals. We are very excited to be moving quite aggressively into Europe next year. We are not magicians. We are certainly not the people who have the best insight, but we certainly pay a lot of attention to what the financial world is talking about, what their predictions are, and the predictions are that Europe, in terms of a currency, the euro, will outperform the dollar and most other currencies over the next 2 to 3 years. And at the moment, the real estate cycle in Europe is at a very opportunistic time for people to be investing in Europe. So we are looking to expand next year into different parts of Europe. We are currently shortlisting and going through the sponsors who we think meet our quality requirements to bring deals in Europe to our platform. So you can expect that probably towards the second quarter of next year. We want to bring a lot more opportunity deals into the UK market. We are optimistic that Brexit will provide some very interesting opportunities for investors, where you'll be able to get really good assets at good prices and therefore good returns based on that. So we are very much looking at the UK market, and then as usual, the bankables out of the USA. We are looking to expand to a whole new range of sponsors. We're in fairly advanced negotiations with some of the sponsors who are world-class, extremely experienced institutional sponsors out of the US, and in quarter one of next year, we should see deals from those sponsors coming through the platform.
Martina asked, do you provide tax certificates?
Martina, we don't, and I'll tell you the reason not is we provide you with a transactional history on the platform. A tax certificate is normally quite specific to a general location. At the moment, we have investors from over 60 different countries. So we do provide you with a taxation report that you can come and look at and download at any time. Actually, at the moment, as I say that, I must just qualify that by saying when I say any time, at the moment, our tech team is changing. As the wallets are coming on, we're changing how we're doing that. So for the next month or two, you won't be able to download it, but we will be able to give you the information if you ask our client support team. But by early next year, you will be able to download the transactions. In that transaction, it will explain to you what income you have received. It will also give you a summary or a history of any tax that has already been paid by the deal provider, so that if you live in an area that has a double taxation agreement with that country, working with your own tax advisor, you can then figure out how to process that on your own tax reporting on your own side.
Perfect. Okay, well, you can see while Lyndon's been answering questions, I've been just putting up polls. You know, the more people give us, you know, what they're looking for, the more we can personalize their journey going forward. Lorraine has asked a question: once more people start adopting your platform and becomes very popular with the world's property investment public, would your fees be decreased to under 1%?
That's a great question. Yeah, I mean, both of us, we can give it a go. Absolutely, the scale helps reduce fees. So, you know, once we really have gone exponential and are growing, it will certainly do that. I think it's worth understanding our fee structure. You know, one of the things Wealth Migrate does, which is why so many investors from around the world are adopting us, is that we take away the requirement for you to have your own legal, banking, audit and accounting support in each of these countries where we offer deals. By providing those structures ourselves, so that you, the investor, don't have to do all of that work, it enables you to invest like the extremely wealthy who can afford to pay for all of those services. A lot of our fee base is based on that. It's based on the requirement we have to be able to provide you with a very easy way to invest globally. And as those fees, we are constantly working on bringing down the cost of our structuring and our financial transactions and our compliance. And as we bring those down, we will certainly be working on trying to adapt our fees accordingly. Scott, that was my take on it. I don't know if you wanted to add.
Yeah, and I think the only other thing that I would say is that we did used to have a private equity model, which was very similar to the 2 and 20 with waterfalls and hurdles and, you know, things that people don't actually understand. And we decided to copy the Airbnb model, where the fee is no more than 3%. It's very simple, very easy for people to understand and calculate. And the reason being is, as you said, it's mass adoption and making it simple and easy for people to understand. So, you know, that was our intention. And rather than sort of using all the financial language and the lingo that's used in the financial industry, actually, basically, we copied Airbnb and made it simple. And intend to, you know, try, as Lyndon said, bring the costs down as much as we can, you know, on an ongoing basis, but also keep the lingo as simple as possible, you know, in terms of our core values. Lyndon, what I'd like to do is I've got a couple of slides I'd like to just finish off with, and then if there's any more questions from anyone, you know, a lot of people have said thank you very much. They really enjoyed it. They love these WealthE Wednesday tuts, etc. We really appreciate that. You know, for me, as we come to the hour, I really ask people, what are you doing to be a global citizen, and are you ready for 2020? You know, it's the last month now before we go into a new decade. You know, we've given you a whole bunch of options. Well, actually only 2 options today. There's a whole lot more that are coming in the pipeline. But really, you know, what's beautiful on WealthE Wednesday is people can take action. They can participate from $1,000. We only do it for 24 hours. So people can literally, you know, get involved from $1,000. It's the cheapest, easiest way to get involved. We've also got the inner circle, which is, you know, our global community. If you don't feel that you're ready to invest, but you want to join a global community where you can learn, you get access to a huge amount of information, you get access to all our resources. You know, tonight I'm going to share so much stuff around the goals and everything, but all the resources will be shared with our inner circle. There's coaching, there's mentoring, there's inspiration, and then most importantly, you get to learn while doing, and people can actually get to participate. You know, we've got the Wealth 5.0 Accelerator, which is coming out in January next year. You know, look out for this. It's taking the best of what we've learned from Hilda and Garth and some of the immigration people, myself, etc., Lyndon, and bring it together in a digital product for people to really be able to kickstart their year. And then, you know, as we discussed, we've got the starter pack. If it all sounds overwhelming and you're not sure what to do next, we've got the starter pack. It's not live at the moment. If you're interested in the starter pack, just type in their starter pack and we'll let you know once it's live towards, you know, the Christmas period in terms of where we're at. And like I discussed, there's a whole bunch of things that you get in the starter pack, which makes it easy and just brings it all together. And so really for me, that is actually everything. I don't know why this slide is stuck here, but that is everything that we had today. And in terms of this morning session, the only thing I would say is that we've got the session this evening, and I'm going to be taking people really through how to become a global citizen. We're going to be running through goals and planning. You know, I'm a big believer in life that you create the destiny, you create your future by setting up your goals, and we're going to take you through all the processes. So come along and enjoy that, tell other people about it. We really want to share with as many people as possible so that they could be empowered, you know, going into the new decade. And then from my side, and probably, you know, not speaking for Lyndon, but thank you. It's always wonderful to have so many people from so many different parts of the world. And I can't believe that we're at the end of the year and at the end of our WealthE Wednesday series for 2019. And, you know, our intention certainly as we go into 2020 is to just add more value to more people and specifically to you. So if you've got any ways that we can add value, please let us know. You know, what do you want? Do you want more information? Do you want more deals? Do you want more access to due diligence? Do you want lessons around what Lyndon spoke about? The more you ask us, you know, the more we can provide value, which is exactly what we're trying to achieve. So that was all from my side, Lyndon. I'm looking through and I think we've answered all the questions for today. Is there anything that you want to add in terms of finishing off?
No, just to reiterate what you said, it's a real privilege to be able to join these webinars and to see the global network that drops in and joins us once a month. You know, it's a great feeling knowing we're talking to so many people around the world and making these opportunities available. So just thank you for joining us today. Really a privilege to be able to be here with you.
Cool, awesome. And yeah, take advantage of WealthE Wednesday. We do it for one day only. And really, you know, a lot of people waste money on Black Friday and Cyber Monday on trinkets and gadgets that they're not going to remember in 6 months' time. Whereas our whole intention is to help people invest, get the knowledge, invest, you know, have the self-confidence, and ultimately set themselves up for success. And really, it's about the consistency. And so, you know, my suggestion or my my invitation is to join us on a journey and get started. And that's what WealthE Wednesday is all about. Other than that, thank you very much. Hopefully we'll see many of you online tonight. We've got a very different session with a lot of value to add. Lyndon, thank you for your time. Really, really appreciate it. And good luck. I know you're in the office and need to get back to all the operational stuff because we've actually just closed 6 deals in the last month. And so there's a huge amount going on in terms of execution and delivery. So really appreciate your time. Cheers, everyone.